Our next presenter is Brock Salier, who is a publishing research analyst at the Sprott Merchant Banking Division, Sprott Capital Partners. He has a technical background after working as a mining and exploration geologist in Australia, including with Placer Dome and Rio Tinto. Dr. Salier holds a PhD and a Bachelor in Economic Geology from the University of Western Australia.
Thank you very much, Anna, and thank you everyone for inviting me along today. I guess the focus of the presentation we're going to look at now is what happens next. A lot of the talk today has been about reaching this glorious exploitation license point of your development. And it comes across to me that a lot of people in the room consider that to be the final step. For the funding of these mine builds, that's really the first step. And as we go through this, there's a lot of subtleties, and I think Greenland's come on a long way, and I love the focus on exploration and geology, which has, I think, been very well bedded down. That focus has now shifted to exploitation, but beyond that, there's a lot more to go. So if we could just flick through to the first slide here, I'll give you a quick introduction to Sprott. I assume I pressed the button here, do I? Voila. So Sprott, $11 billion US asset manager. We're in the merchant banking division over there on the right. We've got a mixture of passive ETFs, gold miners, gold, physical gold, $2.5 billion in managed equities. The lending fund, $0.8 billion there. I'm going to come back to that one because that's probably the most important aspect of this entire permitting regime for Greenland is how to get the debt. It's not something that's been talked about a lot, but it's really critical. I've put a few examples up here which I'm going to come back to a few times because it's not easy. There's two things that Greenland faces which a lot of peers don't. The first one is having the first large Western industrial mine financed, and everybody hates being the first mine. Everybody hates investing in the first mine. The old phrase of pioneers ending up with arrows in their backs. Everyone likes to invest in the second one. So the first thing I think Greenland has to do is get that first one off the rank. And the second one is that pesky snow and ice. It's not easy. So we've put a few financings that we've done up there, which are a mixture of Emerald was in Cambodia and Adriatic is in Bosnia. Both of those are pursuing first mine build status. And the remainder of them, well, three of them there, White Gold, Sabina and Timac are all in the far north. Just to give an example that we are used to dealing with the far north. And Alpha Min's out there on the end to show that what can happen. That's a Eastern Congo mine which we've financed, which is arguably in one of the less desirable, most undesirable locations in the world. But hey, it's been financed and it's cracking on. So look, I think the presentation we just had was very correct. It's a competitive world out there. We need to get a return on capital, not on an absolute basis, but on an annual basis. So being late is being wrong. Taking too long is being wrong. We've got to get this return on capital over a defined time frame. And for Greenland, you've just got to compete against everyone else. I think that's been very well identified already. The most important thing for us, what we look at as equity investors, equity raisers, and debt investors, I'm going to come back again and again, is a fiscal scheme. But it has to be flexible. I mean, look, I haven't heard of half the minerals that people have been mentioning today, and I'm sure that the processing flow sheets, there's a few of those which are new as well. Some of these projects I've seen today are incredibly high margin and I think can and should support a strong fiscal burden. Other ones are incredibly low margin, and if you put any fiscal burden on them, they won't be there. So I think you do need some flexibility there, and as well as a visibly supportive government as well. Again, the risk here is you can get bogged down in discussions. At the end of the day, we need a fiscal code which supports debt, and we work back from that from equity. And most importantly, of course, ahead of that, the environmental, social and community impacts, which have to come first of all. So the regulatory permitting framework, I think, is the most critical. We've just heard about the 5 processes to improve and to start working towards that. But those codified rules, regulations and processes, and I'm going to say it again, defined timelines, always hard to stick to, are critical. And you know what? You just need one mine to start. There's a deep distrust of Greenland at the moment. We haven't seen mines. I'm not an expert in Greenland. I don't know why we're not seeing mines built there, but I know there aren't. So we sort of just wander off and find another country like Burkina Faso, which has got 8 mines being built, I think, in the last 15 years, despite some pretty big infrastructure and security hurdles there. So I'm going to use 2 examples here, and this might be a bit horrifying for Greenland to be put in the same boat as Cambodia and Bosnia. But these are 2 examples where we've personally funded the very first mine in well, hopefully, getting there in both countries. Modern Western mine, I've got to be clear here, there's a lot of mining history around in these places. Now, it's interesting when we look at Cambodia, so we invested 60 million of debt, raised 50 million of equity, and we've invested our own equity as well there. What was the challenge there? And I've been on a roadshow around the world on this one. It was always the same problem. They're not mining friendly, and we dig in, why not? Well, there's no mines there, so they can't be. So that first mine is critical, and the biggest perception was first mine fear. So what did the government do in Cambodia? Great fiscal code, 3% royalty, 30% tax, 100% ownership, that's a big one. A 5-year tax reduction and withholding tax holidays. These are bespoke to the particular project. And again, the first mine, we always believe, should get the most favourable treatment because they're the guys who are taking the biggest risk. Now, other things they've done there, infrastructure is always helpful, less relevant, no one's going to be building power lines crisscrossing Greenland. Open access to the ministry is key. We love the fact that we can visit these countries and go and see ministerial staff and speak to them face to face before the big money comes in. And community upside. I saw one of the little footnotes there on point 5 today was to investigate the distribution of taxes to local communities. We're probably a bit more aggressive on that and would suggest a slice of the top line royalties need to be hitting the local communities. I'll come on to the ESG and environmental aspects a bit later, but you have to start with the local people, keep the local people happy to the highest environmental standards. When the people are happy, the politicians are happy. When the politicians are happy, they tend to be more favourable on mining. Now, what do the miner do here? I mean, look, you're talking about some pretty impressive environmental reports and studies that are going into Greenland, but who's around to, do we have a cadastral authority and an environment ministry who is capable of dealing with these studies, who's dealt with 10 of them before and is used to these rare earth minerals that I've never heard of? Of course not, because it's new. So certainly in Cambodia, what was done was to have the IFC audit the environmental reports. And that was acceptance of the government that they didn't have the expertise themselves to do it. And that's a very mature attitude because it's something that builds up over time. In that case, in Cambodia, the issuer introduced environmental bonding, hadn't been there. So they said, this is how it works, this is how we do, we'll give you money up front to remediate. These were just amazing things which were done by the miner. But the most important thing is something we haven't really gotten to talk about much yet is the fiscal stability agreement. When people put the debt and especially first mine equity and they're looking for a fiscal stability agreement, some kind of, if you change the laws, that's fine, you should change the laws. And everyone has to adhere to those. But someone who's invested a 5-year payback, that's a big problem. So it's fiscal stability which can just provide keep stability on the fiscal terms in case of a change in law, they get renegotiated. But I'm going to go into that in a bit more detail because we've also got things like creditor protection, step-in rights for creditors, all sorts of subtleties which without, you won't have the debt. Without the debt, you won't have the equity. With neither of those, there won't be a mine. Bosnia was another interesting one. It's a little earlier stage, we're not on the mine build, but again, it was the first sort of modern mine being funded in equity. What was the challenge? Again, global roadshow. There's no mines in Bosnia, it must be terrible. And hey, there was a war there as well, which doesn't help. So again, that open access to the government was fantastic. I was able to go out there, meet the ministries, understand why there weren't mines, see what was being put in place, realise that there's a pro-mining country and there's nothing to be afraid of. Again, the government there has an attractive fiscal code. There's a lot of talk about fiscal codes and whether they should grab the money up front. Certainly our experience about community uplift is you don't have to take it all up front. The payroll tax, the jobs, the recirculating of the money is just going to be so beneficial to the country. Again, we've got that open access to the ministries and timely permitting. And the thing about Bosnia at the moment is they're turning permits over quickly. They might be subsidiary to the exploitation, but that is making people watch. And again, the miner there had a huge community commitment. I think that's something that all the miners here in Greenland have done extremely well, and best-in-class environmental. And there's a real opportunity for us now. The mining industry has been taught a serious lesson through the Vale disasters, so coming onto that environmental best practice is a must-have, and I think that's being done very well by everyone. So look, if I look at Greenland, there's a few comments today regarding uncertain timeframes and an unpredictable outcome for an exploitation process. I think what was in the ministry's own words. So look, we've seen a lot of talk, but we haven't seen that tangible progress. And the risk is that the excitement abates, and we've seen that investment come and go, but over time, those exploration dollars will dry up if people think they can't get a mining license. So the money is certainly going into evaluating the projects, but I still keep scratching my head. Why is there not a mine? I would think I was on site in 2010 and we haven't seen much sort of difference in the permitting since then. And you're right, I think when you incorporate how to address these fiscal code, it's a tough logistical area that just needs to be baked into the system. So the opportunity here, I think, is first of all is just stable fiscal terms. You have to have that flexibility on a project-by-project basis, which I know makes it even more complicated for the government. And a fiscal stability agreement. This is really critical. So once you get an exploitation license, these miners, you'll be out to seek the debt first. Now, the debt is very important. The creditor protection that the debt lenders need are very important. What is the jurisdiction for the arbitration? What are the step-in rates in the case of a credit default? On and on. There's a whole lot of things that the debt lender will be looking for from the miner. They're not going to engage with the government. They'll approach the miner and they'll tell them their list of demands. And about 2 years later, the miner will come back from the government with them. So I think it's something that really needs to be start thinking about now. What is the creditor protection for the debt? The debt is the first place these mining projects start. And again, this is several months and years and steps beyond the exploitation license. So that's something we need to look at. And then, of course, always environmental social governance. I mean, the reason we're here is to contribute to the community. I love mining. I'm passionate about the contribution it can make to the community. And that's something which I do think the government is doing extremely well, and the miners. So that's the short story of how we look at it. I think it's all ahead of Greenland, the mineral wealth. I think the Ministry's comment was that we won't have the same contribution as West Australia or Canada does. I think the opportunity is to have a greater contribution per person. It's a small country, spectacularly well endowed. So, I wish the very best for the future of the country and hope there's projects there that we can invest in coming years. Thank you.
Thank you very much. I would just like to point out that there are operating mines in Greenland. There are 2 operating mines, Ruby and Pink Sapphire Mine, which has been in operation since 2017, and another mine, Hudson Resources, with a Northesite mine, which has been in production since 2019.